Playing it safe costs me more than any risky deal, because what happens is when I was playing it safe, I was not actually doing anything except for what everyone told me I should do, right? I was buying stocks with my retirement. I was investing a certain percentage. I was saving. But these predictable ways of growing wealth are predictably mediocre, right? They're ways that you will not necessarily lose your money. We've talked a lot on this channel about hidden fees. The fees are honestly much higher than what they say they are for mutual index funds, for having a money person. Most people that are wealthy that I know that have a net worth of $1 million, $2 million or more, they'll have some sort of money person that kind of guides them and things like that. And they don't realize all these fees that are being taken out. So the returns are never even as good as the market. And so how do you find other ways to grow your wealth in ways that are not considered risky? If you're like me, when you first hear about alternative assets or hear about this term syndication, like, oh, that sounds like a crime thing, like a crime syndicate or something. But what is a syndication? It basically is pooling together capital to go buy an apartment building, buy a business, to go get involved in different types of oil and gas or other types of deals. So as an investor, I want to have higher returns, right? Because if I can have something that I can have higher returns, even at lower risk, that would be exceptional. So how you define risk is really important. If you think risk simply is it's something that other people are not doing, that's not necessarily risk. So when I look at alternative assets, which we actually call them real assets because a lot of times they have a foundation or they're physical structures or there's something tangible like oil and gas, I think they're way safer than paper assets that we trade online and things like this. And so how you define what is risk and what's important is a lot of times they determine in terms of volatility. Stocks are incredibly volatile, right? Even bonds have been very volatile with interest rates moving around a lot. So what grows wealth consistently over time? Typically, it's things like private equity, buying private companies, small companies that are not publicly traded. This is what the ultra wealthy over 20 million do. And also buying commercial real estate because it's stable. It provides income every month. There's an inflation hedge built in there. So how you get over in your mind of getting comfortable with something, or I actually talk to a lot of people. I've talked to over 2,500 high net worth investors. And a lot of times they say, well, I'm interested in this, but I have these reservations. Or, my spouse really isn't on board with this. How do I get my spouse on board? A lot of times you have to think about what are we doing and are we getting the results that we want with what we're already investing with? And it's great when the stock market's going well. Right now, the stock market has been doing well, but stock market goes up, stock market goes down. And if you have a 20% or 30%, decrease in the stock market, people don't like to talk about that, right? People just kind of stop talking about stocks. But that's a very cyclical thing that happens. There's other businesses that are more predictable. There are things that wealth grows consistently over time. And again, really what the goal is to start developing more passive income. And risk is not just like crazy risk, right? Like, okay, if this doesn't work, I'm going to lose all my money, right? That's probably not a good risk. But calculated risk is more, hey, I'm doing this, and if it works, I have this huge upside, and if it doesn't work, I might lose a little bit, right? But it's not like I'm losing all my money, right? There's some sense of, hey, I'm taking a calculated risk here. And so there's a lot of things, actually just a general principle in life. I've started doing this where I'll say, hey, if I go and I investigate this new thing, we've started doing modular and manufactured homes in Altadena, California after the fires. And that just started from me exploring, putting a little bit of time into it, a little bit of money into it. And I realized, hey, this is going to be something we actually really can do to help a lot of people. We can help build, we can do a lot of things here, and this is going to be incredible. And so, but it started from just being willing to dip my toe in, to learn, to put a little bit of time and resources behind it. And if it doesn't work out, I learn a lot. I learned some things that, okay, this isn't going to work for this particular scenario, but at least I learned something, right? So if you have this growth mindset that everything is happening, really, it's happening for you and not to you, right? That's a huge mindset piece. Everything is happening for you and not to you. So when it comes to managing risk, I like to think of this now of a scale of 1 to 10, right? So 1 over here, you have the safest things you can think about. You've got treasuries, you've got cash and bank accounts, you got money market funds. A 10 over here is you've got, early stage venture capital funds that there's no revenue yet, right? So that's maybe a 10, a high risk. And in the middle, we've got all kinds of investments. So you've got to rate and see, okay, this specific investment, where do I see this as, right? And so we've got investments that are like first position debt funds that I see, right, as like a 2, right? Where it's like, it's not the same as cash, but they're asset backed, it's first position, a lot of things there. Other investments we do are kind of in the 3, 4, 5 range, right? So it's just good to understand what you're doing and say, okay, just because this is unfamiliar doesn't mean it's something I shouldn't do. And so one way to get yourself, get your spouse, get other people comfortable with managing risk is to get around other people that are doing this. We started a group called the Wealth Forum. We typically have about 20 to 35 people that gather once a quarter. We talk, these are all high net worth people. We talk through what we're doing. We share notes. I've worked with this asset or this operator. I've worked with them all day long. I would not work with these guys for these reasons, right? So that collaboration is really, really valuable. So that's how you get comfortable with risk, because the problem is if you only do things the way that you're taught to, you're never going to become wealthy. You're never going to really grow your wealth in a substantial way. And, Dave Ramsey is great. Dave Ramsey is 101. And I think that the challenge is when we only do the things that everybody else is doing, we're going to get very predictable results, and they're typically very mediocre. So I'd love to hear from you in the comments. What are you doing so that you're getting outstanding results, investing in assets and in ways that really you're calculating risk and you're really seeing the benefit of it? Stick that in the comments below. If you haven't joined our investment club, you can see the link below or go to bronsonequity.com. Look forward to seeing you in the next video.